Come again. This is CAAZSS Trading Academy. Right. Today we'll be talking about what is pips and how to calculate it. So, for example, you open a trade on Euro USD at 1.1000. Later price moved to 1.1010. That is 10 pip price moving. That's 10 pip moving, right? So now imagine you are trading one standard lot. You just made $100, right? $100. But what exactly is a pip? Now is that calculated? Let's break that down. Go down next slide. So pip is point in price, right? So I've mentioned that in the previous videos. Please go back and watch again, right? So pip is price point in percentage, right? It is the smallest price movement on a currency pair a currency pair can make based on the market convention, right? Market convention. Now let's look at an example here. We have Euro USD 1.1000 to 1.1001. That is one pip movement, right? For Euro USD. For JPY pairs, one pip movement is 0.01. For example, Euro USD moves from 1.10 to 50, 1.1050 to 1.1055. That's 5 pip movement, right? So to calculate pip value, it is 1 pip over the exchange rate multiplied by the lot size. Multiplied by the lot size. So don't worry, we'll deal with that as we move on. You don't really need much of that calculation, right? So let's say how to calculate a pip value. Let's say you make 10 pips. How much is that in cash, right? That's what matters, not the necessary calculation, right? So make 10 pip, how much is that in cash? So it depends on the lot size and currency pair, right? Now, for a standard lot, which is 1.0 and it is 100,000 units. So that is 1 pip. So with that 1 pip, that's one pip, you make $10 with 1 pip, right? Using a standard lot. Please take note of that. Take note of that word, right? Standard lot. When you use a standard lot, a 1 pip movement with a standard lot size, you make $10, right? Okay, now I'm entering the market with a standard lot, which is 1.0, right? So and the price and market move 1 pip. So when market move 1 pip, I make $10, right? Market move 10 pips, I make $100. Market move 100 pips, I make $1,000. You understand that? That is for standard lots, right? For standard lot size. You understand that now? Now, the next one over here is a mini lot. So mini lot is 0.1, right? Which is the 10,000 units, right? So you are going to the market with a mini lot of 0.1, and when price moves 1 pip, you make $1. There's very big difference with standard lots and mini lots, right? So with the mini lots, you will go into the market with the mini lots, and price moved 1 pip, you make $1, right? So for the micro lot, which is the third one, there is 0.01, which is 1,000 units. Don't worry about the units, just worry about the lot and the pip and the amount in cash, right? So, for example, you enter the market with a 0.01 lot size, which is micro lot size, micro lot, right? If market move 1 pip, as you make 0.1 cent, right? 10 cent together, so you make 0.10. So if the for example, you market move for the micro lot, which is 0.01, you go into the market with 0.01, and market move 10 pips. That means you make $1, right? Make $1 with 10 pips. So it is quite different, quite different, quite different. So you need to understand these calculations. And so when you start placing trade with the lot size, you have understanding, okay, I'm going with this lot size. If I have 10 pips, I have this amount. If I have 1 pip, I have this amount, right? With the lot size you are entering in the market, right? So the formula for calculating that is, don't calculate pip value. This is 1 pip over the exchange rate multiplied by the lot size. We'll deal with that for those that will get the courses, right? So now the formula for USD quoted pairs like Euro USD, GBP USD, this is just the calculation. So now, but we simplify it. 10 pips on one lot is $100, right? Let's just get that right. It's not a big deal, right? We simplify it. 10 pips on a, you can have a screenshot of this so you can have that in your archive, right? So 10 pips on a one lot size is $100. 10 pip on a zero point 0.1 lot is $10. 10 pip on a 0.01 lot, that's a micro lot, is $1, right? Is have this your archive, have it in your jotting notes, right? Have it in your jotting notes. So The higher the lot size, the higher the money you make, irrespective of the price movement, right? Irrespective of the price, even if you just take a 10 pips and you use a standard lot, the money you will make on that movement is not the same amount you make when somebody going with a micro lot, right? So please understand the movement. So going next, we'll talk about the pips in trading practice, right? As a trader, your stop loss and your take profit are measured in pips, right? A very good example is your entry. You're entering the market with 1.20, right? And your stop loss is 1.1980. That is a 20 pips, that's your 20 pip risk, right? And your TP, which is the take profit, is 1.2060. That is a 60 pip what? That's a 60 pip reward. Now, this instance is a buyer instance, right? Let me have a short drawing. Buyer instance. For example, now, this level you're seeing here is 1.2000. And your stop loss will 1.19, sorry about that, 80 is a stop loss, right? So this is your entry. Now your TP is a take profit somewhere here, 1.2060. So that's your TP. That's your TP, right? So this is a buy instance. So you buy the market here, the market went up, your TP, right? So that means this is 60 pip. This is if you calculate it from here, right? From here it's 1.200. Now to this level is 60 pip, right? So if you enter the market at this place, you take profit at 60 pip, right? And your stop loss is 20 pip. So if you minus waiting from 1.200, you have 1.1980, right? That's 20 pips stop loss. So you're willing to lose 20 pips to make a 60 pips. So if you're going in with a standard lot, you know what that means. You're going in with a mini lot, you know what that means. You're going with a micro lot, you know what that means. So now you know your risk to reward ratio is 1.3, right? Let me clear that off. So now your risk to reward ratio is 1.3, right? You just lose one to make three. You understand? So and now you can calculate potential loss and gain based on your lot size. So I hope you can do that from the previous slide. Let's go on. The common mistakes to avoid now. You need to avoid the mistake confusing pips with pipettes, right? The difference there is the extra digits, right? So forgetting that JPY pairs are different. JPY pairs are different. I mean, JPY pairs as in USD JPY, Euro JPY, GBP JPY, AUD JPY, NZD JPY, like that, right? They are very different from the USD pairs. So JPY pairs are different from the USD pairs. Now, another thing is not knowing how much one pip equal in your own trade. Very dangerous, please. Very, very dangerous. Please don't go into a trade without knowing the lot size, without knowing how much is one pip in your trade, right? And the next thing you need to avoid is risking too many pips without knowing your lot size. When you risk too many pips, you risk too many pips without knowing the lot size, right? You don't know the lot size you're going with. You don't know with this lot size and this pip distance, this is the amount I'm making. You don't know that. Please don't venture into trade, right? You need to know your lot size and the pips. You understand? You are going the pips you are aiming at, right? It is very, very important we understand that. Very, very important you understand that. So I said from initial start, I said pip is a unit of measurement for price movement, right? In Euro USD, I give an instance. When it moved from 1.1000 to 1.1050, that's 50 pips, right? When you use a standard lot, that is one standard lot is equal $10, right? That's per and $10 and per pip, and 50 pip is equals to $500, right? So always combine pip with lot size and proper stop loss and take profit, right? It's very important. It's very important. And if there's any question, please, I would like you to drop the questions at the comment section, or send a direct message to us on WhatsApp, or maybe from our website. You can go to visit our website, zsstraders.com. Visit our website. You can ask questions, send us direct message, right? Or get our courses where the full breakdown one-on-one mentorship will be. So now let's go on. Now that you know what PIP is and how to calculate it, I'm sure everybody know how to do that now, right? So we can go even deeper. Your PIP value actually depend on another powerful tool, right? Which is called leverage, right? Leverage is another powerful tool that depends on the PIP, your PIP, right? Your PIP calculations, right? So in our next section, we'll explore how leverage can multiply both your profits and your risk management and your risk also, right? So thank you very much for this video, and see you in the next video.